Happy New Year, Scorpio. Thanks for having me on.
Well, happy New Year to you, sir, and thanks for coming on. I think it's going to be a good one today. So while we're people are kind of trickling in, we can do the kind of softball stuff. So what is both your background in DeFi and crypto, and just sort of the team in general?
Yeah, for sure. So, my background in crypto, I've been in blockchain space, buying Bitcoin, not knowing what's going to happen to it. At first, I was getting it around 2014, is when I actually obtained my first Bitcoin, and I didn't really appreciate it. I didn't understand it. I never really did any research to really understand it. I happened to be withdrawing into Bitcoin just because the web service that I was using, they had an option to withdraw into ACH or whatever with for a fee or Bitcoin. So I chose that option. I jumped in and I wasn't paying attention. I kind of forgot about the account until 2016, 2017, when the market started building up. It started becoming more and more interesting, and that is my entry of crypto. And the team, we have people that were both advisors that have many years experience. Two people that are pretty new that just got into DeFi. So we've built a team. Our core team is about 5 people, which are part of the marketing that helps us kind of create the content plan for our project. The We also have Omega. He's in the room here, and he's the tech lead. He's been in crypto for a few years, and he's helped kind of both develop the front end website, the designs, testing the contracts, and really kind of getting us to the finish line. And we also have people from the traditional kind of marketing space, and everyone's, the dynamic is really cool because it's people all over the world that have worked on Max. And there's been over 20 people that have had a part in this project. The idea kind of stemmed a year ago to start this project, and we created the handles and got the website registered in October of 2021.
So the next question I have is, what is your role on the team?
So I'm the founder. I'm also financing the project. We're bootstrapped, so everything is kind of privately funded. And I'm the guy that actually came up with the whole idea. Back in 2017, 2018, I always wanted to get into development, but I didn't have the experience or knowledge. And going through to 2020, 2021, I knew exactly that I what I needed to do was and that was to build. Usually in the bull markets, you just hodl, and when it gets to a bear market, that's where all the tech is kind of created in preparation for the next run up. So I had the idea. Omega helped lay everything out in a 38-page document. And then starting somewhere around April of last year is when we had hired and really went through tons of people with their or the GitHub repositories, checking people's skill levels, and we hired a person that was actually able to program the smart contracts for us, and we have 6 smart contracts. So I don't have any technical background. I just have been in the space long enough, doing investments and buying into projects and having lots of success that way.
That's cool. That's like an interesting origin story for you guys. And I'm not surprised that you have 6 smart contracts, because this is a pretty complicated project, which I don't think is bad. That's not like, oh, it's too much. Because I think that anything this original and this kind of fresh is gonna have some more ins and outs. So before we start kind of digging into the nitty gritty of it, can you just give us like the high level of what Max Finance is, what financial products you offer, just the kind of bird's eye view of the whole project?
Sure, absolutely. So Max Finance is a ecosystem kind of utility token, which is kind of a rewards token, which people technically we don't promise any price action. We don't know what it's going to be trading for, and what it does is it's doing time locked staking. Which again, we're not really saving the world here. We're not creating like the next Uniswap, but we've noticed that a lot of people like to trade. And most people, when they trade, they lose money. If they go to centralized exchanges, they take leverage on, and that leads to losses. And during the different ups and downs in the market, it's very hard to calculate how the to predict the market and how it's going to act. So what we've done is we've taken and implemented this time-locked staking system to pretty much protect people from themselves. Since we know that hodling is, the answer, this key term was like made years ago when somebody misspelled it. We wanted to really put an emphasis on two things. We wanted to educate people about getting coins off of centralized exchanges. That whole "not your keys, not your wallet" spiel. So you don't have any counter intermediary like issues like we've seen with FTX. So we're teaching people to get into DeFi, and the second thing we're teaching people is to hodl, to pretty much wait because eventually the market is going to recover. And if you're trading or if you're keeping your money on, FTX or Luna or any of these other projects that are kind of they're really centralized and they hold your keys, that could be an issue. So the time lax staking deposit has been done before. It just has never been done in this fashion. Some notable projects that maybe you guys have heard about was a Hex. There was a Wise token. Axion was another one of them, and they've done this type of time lax staking, which pretty much from the high level is where you lock up a certain amount of coins. So let's say you have 1 million max coins, and over a period of time, we have a programmed contract that once you stake it, you start to stake, you lock those coins up, and they will guaranteed pay you out a yield. As long as you fulfill the amounted, the obligated term, you will be able to get your coins from the contract back, which you interacted with, and you will get the additional max tokens, which you pretty much mint from just doing this kind of system. Um, so it's as simple as that. We don't provide yield, or we don't do yield farming where you can have impermanent loss. So you're not holding multiple assets. Essentially, you're just interacting with Matic, which is the native Polygon Matic Polygon blockchain token, and the Max token. So that's pretty much it. What we've done though is we've seen issues in rebasing applications that have been really super popular. They're just forks of forks of forks, and there's like hundreds of them where they offer users super high yield, and people go there because they like the idea of getting a lot of percentage back. And what we've done is we've dumbed it down. We've made it actually sustainable, and the way that we've made it sustainable is by testing it and making sure that over a certain period of time, this protocol isn't going to end up kind of imploding because it's paying out so much yield and so many of our native tokens. All of this has been back tested, and it's proven. We also have the protocol in testnet. We've run multiple testnets. We've had over 2,000 people that have interacted with our contracts in testnet. And this is essentially just to give to give the users the ability to generate and earn yield without having to get risks through providing liquidity, yield farming, and having like impermanent loss, or going to the second thing, which is like projects that offer 100,000 APY per month, for example. It's a safer version, and again, there's nothing really that's safe in crypto, but it's a
Right.
safer version because our percentage that we inflate, we also have tactics to counterbalance the inflation with buying and burning features, different penalties, different kind of gamified features. So ultimately, from that bird's eye, 1,000 or 10,000 feet up in the sky, we're just a gamified. It's like a game uh, in a token, essentially. It's fun to own. We have different perks and features, and people are have the ability to lock up their coins, earn more coins. And what we will plan on doing in the background is building. Uh, we want to put emphasis on that and actually build additional products that we can offer. And this is our first product, which is the staking application, which gives the people the ability to kind of buy and get the ability to stake and use our protocol. And we also plan on backing everything up with utility. So we want to actually make this protocol backed by validator nodes. We want to have the ability of owning actual products in the DeFi space. For example, not everyone can afford 32 ETH to run their own validator node, but a lot of people want to interact with protocols that actually are asset backed. So we plan on having an additional layer of protection by owning validator nodes, and whatever those validator nodes produce, that's going to go back into the ecosystem and benefit the stakers.
And I thought that was a really cool feature because, like, I think everyone in the world of DeFi has at some point said, "Man, I'd love to be a validator, but I don't have, 32 ETH or whatever the validator threshold is." And so I thought that that was a cool feature of this, that you could own a like essentially own a share, you know, through investment in this protocol. You get some of the benefits of owning a validator without having to own a validator. And I'm guessing that you guys have, plans over the long term to like continue acquiring validators both on Polygon and across chain. Is that accurate, or am I just making that?
Yep, exactly right. And that's just another feature that we've taken from other projects. I don't really like naming projects, but they're out there. We've
Sure.
done a lot of research and looked at these other projects to see what they've done. Why did people, choose to join those communities, and why did they want to kind of interact with this project? We didn't we took actual functional projects that work, that have a nice community base, and we put it into this nice package, and we called it Max Finance. We made sure we tested everything, and the validator nodes are going to be huge because again, people can't always afford to run their own nodes like this. By investing or by buying max tokens while you're holding, while you're hodling, and you're staking, your tokens, whether it's for a year, for 2 years, or whatever, the liquidity that comes in, that the users bring in, will go to purchase validators. And let's say the market recovers and we go to a new all-time high. The community could decide and make a vote, because we are planning on having a governance system where they decide, hey, maybe we should start, selling our ETH validator nodes that we bought for $1,000, and now ETH is sitting at $7,000, and putting them to work somewhere else where it's a little bit safer, like for example, stablecoin yield farming on other protocols, which we've seen super successful. So yeah, that the idea is to have this kind of ecosystem which is safe, which isn't YOLO and gambling and putting everything on red and rolling the dice or whatever. So yeah, that's the idea, is to have an asset backed ecosystem, and that's what the validator nodes and the liquidity providing will do, amongst other things, which is the fact that we want to build and we're able to build, and we plan on actually creating a lending and borrowing platform, which is also going to generate additional revenue for the ecosystem. So lots of, we have we have ambitious goals, and so far we've met all of our deadlines. We don't keep, we're not making vaporware, which is like, just selling a token that doesn't do anything and then promising people. We like to work backwards. We like to build. We like to create the community organically, run these whatever we can to let people know about the project, and then grow as the community grows, as the ecosystem grows, as the volume comes in, which we know it will be coming in. We will be able to expand rapidly.
Talk to me about the free claim and airdrop release, because the free claim is very, very interesting to me. I'm interested in the why and the how about it. Like, why did you decide to do a free claim, and how kind of are you able to afford it?
Yeah, great. So yeah, that's actually one of the first things, and it's actually live now. So people have been using it. If anyone's listening, you can also pull up our website, max.finance with two X's, and there's a DApp that you can go into, and you can actually go into these. Let me see here. Um, you can go into the free claim section here. You can also read our documents page. It'll give you all of the information. So essentially, what we've done is this is a method of not only rewarding people that are in the DeFi space already, but it's going to help our community gain traction because you can have risk-free max tokens just by holding any other tokens on 70 different networks. The networks can be found on our website. You can go to Max Finance and check out Free Claim. They're super popular. For example, some people I'm sure here know about Trader Joe's or whether even stable coins like True USD or Trust Swap. If you have any tokens on any of these networks, you're eligible to get a free claim. We took a snapshot of all of these blockchains. And essentially, what this is going to do is this is going to give people the ability to discover Max Finance. Since we are bootstrapped, we don't have a endless amount of capital to just throw into marketing. Like a lot of projects, they have VC funding and whatnot. And our goal was to give the project the best kind of foot forward, and that's with rewarding people in the DeFi space. So over 100 million wallet addresses are in the actual smart contracts. They're in the database, and users can go on the website and claim their free tokens up to a million max. Currently, a million max is like a couple of bucks. Given that we're in the amplifier phase, it changes every day. So it's completely sustainable. Some people might say, "Hey, how can you give out 5% of your supply?" And it's completely sustainable. We've done and run back tests to make sure that we can actually do this. The second thing is these users are going to be forced to stake for a year. So they're not going to be able to touch those coins for a year. So far, we've only had 5% claimed. So 4,134 people or wallets have claimed max tokens in the amount of 261 million max tokens are going out, which is great because our project is completely new and we already have somewhat of attraction. We have people that are holders of the max token, which it looks good, right in Polygon Scan. If you go there, you'll see more users holding it. That's great. And then eventually, when they get unlocked, they're going to be, there's potential chance that they're going to get involved more with Max during the process. And once they get unlocked, they'll be in the ecosystem. They can decide to restake or do whatever they want. They can sell it. It's up to them. But the idea was to reward people in the DeFi space to get free tokens. As long as you're in the DeFi protocol, you're not on a centralized exchange, you get rewarded. And another thing is we chose the 70 different networks, but based on popularity. We did research on their activity, on-chain activity, the amount of volume that they bring in, and I'm sure that you guys that are here, that you'll be able to see some projects that I'm sure you guys are familiar with. So that was the idea behind the free claim airdrop, and it's worked awesome. Like it's actually, and another feature is that towards the end of the year, the more time that goes by, your the amount that you can claim diminishes. So if you were to be able to claim a million tokens right now, towards the end of the year, it's gonna trickle down to zero if you don't claim it. So we have the more people discover it, even if they come halfway through this free claim amplifier, they will only get 50% of the tokens that are in that contract.
And so what happens to the depreciated rewards? Like I that I can follow. It's like whatever it is that you lose per day. But what happens to those tokens that are no longer claimable by the stakers?
That is a good question. Well, it definitely doesn't go back to us. It's possible that it either gets burned if it's not claimed. Most likely, it gets burned. So there's 5 billion, and that's going to be 5 billion max tokens that are going to be in that contract. If there's only 5% of them that are going to be claimed towards the end of the year, then the rest of them are just going to go and get burned, get sent to a burnt wallet.
Reduces supply, which, at least in theory, can mean that that with restricted supply, there may be some price action. But again, I understand that's not. I think it's very like I appreciate your candor in saying that that's not a thing that we can, promise, because I think people like to promise, pun slightly intended, the moon on
Yeah.
their projects, and I find it very, very refreshing when people come in and they're like, "We are not promising anything."
Yeah, that's
Everybody with a
actually
brain who's been here more than 2 weeks knows, like, you can't,
yeah.
So it's very disingenuous when people come in. Like,
One of the things is we value the community, and we value the people that entrust our protocol. We've done the due diligence to test it and everything, but we always say first of all do your own research, and before putting in money into any project, even if it's not max, you should do your own research. And just don't expect anything. The protocol that we've created, we believe is going to be very successful, but there's absolutely no promises, and there's no price expectations. There's really nothing. The only thing we can show is what we've built. And I never thought that developing smart contracts would be this difficult. I wouldn't have been able to do it without our tech lead, which is in the room, Omega. But it is certainly a challenge, and that's why most people just fork codes, hype it up, pump it out, and and then shit hits the fan. They kind of people usually go in rug pull projects. But what we want to build is something that's organic, that's kind of no promises, no expectations. Here's what we've built, and we're gonna do the best to do without having like paid shills or anything to promote and just let people know about what we've created. And I think that's where crypto is going, is like transparency. You know, we're open and honest in how we manage the wallets, how we manage the keys, how we plan on implementing the DAO for the protocol, because we want to have less input on what happens. Or, we don't want to have the ability to dictate what happens. We want it to be a voting system and user governed. So the people that get in early, they're going to be getting a lot more tokens than people 6 months from now, given the price action and people, additional people coming in. But everyone's going to have a word and say into what happens with this protocol. We're just here to kind of make sure that we can continue to, say, kind of hold the community and keep them up to date and informed. And we run Twitter Spaces every week, every Thursday. We just had one today. And people in the group, if somebody doesn't understand something, we actually take our time to educate them. Some of the people that joined us didn't even know what MetaMask was. So lots of new people coming into DeFi, and that's what makes us happy. And building and creating something that people enjoy and use is what makes us happy. So that's the goal: transparency and success for Max, hopefully.
Can you explain the sacrifice phase?
Yes. So the sacrifice phase and the actual term has been done before. There was a few projects that have done these types of launches. The sacrifice phase is a glorified pre-sale. We just don't like saying pre-sale, just because again we don't promise any kind of returns or any expectations or anything from this protocol. So a sacrifice is essentially your entry to get max tokens. It's your ability to give up your Matic tokens to get your share of max tokens. And the sacrifice phase that we've decided to do is a system that goes on for 40 days. EOS back in the day did one, and I participated in it, and they did it for 365 days. So every day they gave people the ability to get their token through this kind of quote unquote fair launch. Essentially, the normal traditional way, or well, not normal traditional, what most people do is they just list their tokens on a DEX, and the first kind of people that come in will drive the price up. They're going to get a ton of tokens for close to nothing. And if you look at any chart on any coin, you'll be able to see that it's like a flat line, and then eventually, it starts building up. So the free claim gives people the ability to kind of bid their price per day. And we've had over 100,000 Matic, or close to 100,000 Matic, that has been sacrificed into this ecosystem that we've built. And every day you can monitor and see how many people are entering and how much Matic has been sacrificed. Today is actually looking like a really good day, by the way, because it's only 1,000 Matic sacrificed. But some people have different strategies. Some people will just ape in on the first day. And we've seen that on the first day, we've had 21,000 Matic that came in. And then it started kind of balancing out. And now we get somewhere probably on average of 4 to 5,000 Matic in per day. And what happens is the lobby opens at 7 p.m. and it closes at 7 p.m. pretty much 24 hours. And you have the ability to kind of get in on the day that you want. Some folks are getting in and doing like an even distribution between all of the days. Some people are going in, heavier on days where there's less people. I think the best day so far was on New Year's, where there was only 2,850 Matic that was sacrificed. So it's a way to give people this like average kind of balanced out entry before we hit the DEX. At the end of the 40 days, we hit the DEX, and that's when the tokens, what we're going to do is we're going to provide a liquidity that we've collected to make the project liquid so people can actually trade and get in and out. And then it goes and gets listed on QuickSwap, and that's when there's an actual price that's going to be next to our token. Right now, we don't know what the price is. Every day, it's like the users decide what price they want to pay to get their distribution of MAXX tokens.
That was actually going to be my next question, was like if it was a fixed price or if it fluctuated with the market, but that's a good answer for me. And I like that you call it a sacrifice and not a pre-sale, because again, it's much more honest. Talk to me about the liquidity amplifier.
That is part of the liquidity amplifier. So
Yeah.
the Matic is what you're sacrificing, and the liquidity amplifier, it pretty much, it amplifies, or you get a share of the MAXX tokens. It's just the way we called this this part of the project, and it's its own smart contract, which pretty much opens up and closes every day. Whatever you deposit connects your wallet, and you'll be able to see the next day how much MAXX tokens you get allocated. So it's pretty straightforward. And this isn't the first time that it has been done. Just like I mentioned before, we've literally taken bits and pieces that we've liked in other protocols, and we've implemented it in our own project without forking, or this is all created from scratch, tested, audited, and yeah, that's the amplifier is pretty much where you sacrifice it. It's the kind of the lobbies that are open every day and closed at the end of the day to reserve your MAXX.
Got it. Look and check if there's any questions from the community. No,
Sure.
not yet.
Yeah, and what goes hand in hand with the amplifier is the referral system,
Oh yeah.
which we can talk about. We've built an on-chain referral system, a direct referral system, so it only goes from my wallet to your wallet. So if I create and generate a referral link and I send it to you, you automatically get a 10% bonus just by using that referral link, which once again encourages you to not only talk about the project to your to the community or whoever you interact with. But it gives you a bonus, and it gives the person who sends you the referral link a bonus, which gives you a little extra max. It gives you a little more encouragement to share those links. And some of the folks that are interacting with our protocol have had a lot of people that have entered the ecosystem just by this referral system, which once again, it's a good organic natural way to give people the ability to actually for a change earn without you could just talk about a project and then someone discovers it. But like this, if you send them a link and the person makes a deposit, they let's say the deposit $10,000, you're essentially getting $1,000 worth of max tokens as a bonus, which is all built in smart contract. You can see it in the dashboard panel. So some people have been, earning. I think one of the guys today was on Twitter Spaces and talking to us, and he made a deposit, but he also shared the link, and he made close to 40 million max tokens, which is like based on our average, it's like somewhere around $400 in Matic, in Max tokens if you were to convert it into Matic. So it works, and it's worked before. It's worked in other protocols. Once again, just to excuse me, just to give us that wind beneath our wings while we're deploying. And just a little quick stat. So far, almost 2,000 people have, or 2,000 wallet addresses have connected to the amplifier phase. So people have been using it. People have been connecting. And another stat for the referral links, 9,213 unique wallet addresses have created 10,400 referral links. So whatever it is that we've made, we've kind of created this like monster, which is like living its own life now because it's an immutable contract, and this is going to stay forever.
And it's an on-chain referral is really cool too.
Exactly.
Um, the the vault is the other feature that you guys have, and as you said, you have governance options kind of on the governance mechanisms, waiting on the horizon. But can you kind of give us, the lowdown on the MAXX vaults and how they work and how they're different from other, vault
Yeah.
type systems?
Yeah, so the vault is a community managed and voted on kind of war chest, which we're going to be able to deploy as we see fit, based on how the community votes on it. So let's say somebody in the community lodges in a proposal that they think that we should, besides owning Ethereum validator nodes, let's own Phantom validator nodes, for example. So this could be lodged in as a vote. The staking class, and only the staking class. So if you just have a liquid token and you're not staking it, they won't, the liquid tokens won't be able to vote. The staking class will have a weighted vote, which is going to be based on how many tokens they have, how long their stakes are. So the more tokens you have, the longer the stake, the better the vote is going to be for that person. And we'll have these proposals lodged in by the community, and we can make decisions. We can make decisions on how we do marketing, how we do, how we distribute those funds into liquidity, how we build. Tomorrow, maybe we decide to add another product for Max, and let's say there's a third-party developer which can build something amazing. Says that he proposes that he can do this and that, and he lodges it into the voting system. If that vote passes, then the vault is going to automatically allocate a certain portion of whatever is in the treasury, whatever we have in the treasury, whether it's whatever coin that we're going to be paying the developer for. That can happen through this vault. So the vault is kind of the heartbeat of Max. It's going to be providing liquidity to the liquidity pools. It's going to be building new kind of additional products for the protocol. And it's going to decide on how we burn tokens. It's going to decide on which validators we own. It's going to be deciding on how we distribute the liquidity into from the validators back into, stable coins when the market is at the next all-time highs. We're looking at this and we're building something that we believe is going to be a long-term project. Our longest stakes that can be created are 9 years. So, during that time, there's going to be a lot of transactions, a lot of people kind of changing hands with the tokens, and the both the vault and the DAO system that's going to be built on top of it is going to let the community make it a little bit more decentralized without having somebody, for example, like me, which is I'm the founder of the protocol, but I'll be voting just like everybody else. So it's
Presumably
changed.
with a much larger supply of MAXX.
Well, I've spent most of the money that I
Yeah,
had
no, which is
on
fair,
building.
but like let's point out that yes, you will probably have more MAXX than anybody else. But you guys have an anti-whale mechanism, which I think is
Yeah,
also cool, and I also think makes the protocol more resilient. So
yeah.
explain how that works.
Well, for starters, the amplifier system, the amplifier distribution is already going to be one of the measures for anti-whales. It's going to help kind of distribute tokens evenly, because even if a whale comes in, they're going to need to kind of spread everything around on every single one of these days that we're doing the amplifier to get a large amount of tokens. But we have whale protection that if somebody decides to dump a lot of tokens onto QuickSwap and sell a large amount, then it can actually block them from doing so, because just in case, for example, let's say that somebody wants to dump and completely drain the full amount of whatever their holdings were, it can actually there's a protection from that. There's also bot protection that we've implemented. Our goal is to grow organically and give the power to the protocol to the people. That's why we're actually happy that we're not getting a low. I mean, it is kind of the bear market. It's really slow, but we're happy that the community is getting the kind of a natural way of getting into the protocol, and we anticipate people once it hits the DEX that there's going to be much more people coming in with larger amounts of buys, and the buys are going to be great because once again this goes back into raising the price. It'll probably drive the price up, and but I think that's probably the only whale protection. I don't like. We're not trying to discourage whales. Don't get me wrong.
For sure.
We're just trying to protect the protocol so that
Right.
no single kind of or group of people can control or decide on what happens in the protocol. All of the rest of the minted supply is under multi-signature wallets from key members of the team. There's multi-signatures from five people on the team, and three of them require any kind of movement. So we've really put this through kind of a good process, both with the development team, with the co-founder, and myself, to try to make it as safe as possible. Even though in cryptocurrency nothing is really safe, but we've tried to make it and implement all of the protections. So there's no bots that can actually attack the liquidity. There's no way one single person can just unload a ton of tokens. We've tried to make things so that it's a safe environment for people to stake and hold and wait for their stakes to mature.
Thank you to Omega for dropping the utility NFTs in there. I think most people know how boosting NFTs work, so I won't ask you to explain that because I think most people here probably get that concept of yield boosting through um, NFTs. But what I wanted to follow up on with regard to the stabilization mechanism that you guys have, because I think it's safe. You can't, but you can say we're making efforts at sustainability, and I think you guys really have sustainability in mind here. It's very very clear to me. It really comes through in the docs, which everybody should read. These are not like we copy pasted some other, it's all from scratch. So go give it a read. It's on
Yeah.
Max with two X's dot finance. The thing I wanted to ask you about though was this is a tax token, which I know a lot of people hold. I don't have a problem with it, so I'm just very upfront. Like I don't have a problem with the tax token.
Yeah,
If you're going to make money off of it, you're going to make money off of it. I don't care if it's taxed. I've made a lot of money off a tax token.
yeah.
And I believe yours only has a sell tax of 5%, but it does not have a buy tax. Am I correct about that?
So both buy and sell taxes once again can be adjusted through the governance. So we have it in the contract where it's dynamic. So if we need to drop one, we can put it down to zero. The idea is that the protocol, the more people that come here, the more people that use this protocol, the more volume that it brings. People won't mind paying a tax. Now, there's issues with where if you raise the tax to the point where of no return, where it's just like there's no point in selling because the taxes are so high.
Right.
But that's I think that's like called a honeypot or something like that. And we've
Right.
actually taken that into account. We also don't we're not making any money on this protocol. So the protocol, it's not like if the taxes are going into, the founders' wallets, which some of these projects, that's what they do. They
Right.
have their own, they actually profit from the taxes. Half of the taxes that get collected, whether it's 1% or 2% or 5%, that's set by the community. Half of them go into the burn wallet, which essentially removes supply from circulation, which should increase the price. And the other half goes back into the MAXX vault. So the MAXX vault can decide, the MAXX community can decide what they're going to be doing with those taxes or the fees that we're charging. There's also penalties. So like let's say you start a stake for a year and you decide to end that stake early. Let's say the price goes up rapidly, and you're like, whatever. Let me end this stake early. Let me just get out of this out of the token. I'm gonna sell it, cash out. Great. By ending the stake early, it goes based on the percentage that you've staked. So like if you do a year stake and you end it early 6 months down the line, half of the tokens, including the principal, is forfeited. It is completely like that is a penalty that goes back half of it, then half of that gets burnt, and then the other half goes back into the community vault, community treasury, which we once again can decide what we want to do. If we want to buy validator nodes with those MAXX tokens, we would sell the MAXX into Matic and buy more validator nodes, for example. But the community decides. If we don't see a lot of volume coming into the chain, and trading has slowed down, we can lower the taxes, encourage people to trade, and buy and sell. We've seen on other projects, I'm not going to name any names, where the founders were getting a portion of the penalties or the taxes that they were that the protocol was making. So we once again improved on that. We've taken these other projects, we've learned from their mistakes. We want to make it so that the community is happy with the taxes, and I think that they might even not mind paying the 1, 2, 3, 4% taxes, because we're not making this ecosystem where people are going to be just trading back and forth. Although there will be people that will be trading back and forth, we want to create hodlers. We want to create people that believe in the project in the future, that are willing to lock up their coins for an X amount of time, with the intention that knowing that in the future, given that the market recovers, given that MAXX ecosystem is going to grow, uh, that the price is going to be higher, and that delayed gratification is going to really make the whole protocol flourish, in our opinion. And this is what we've seen in the past. So it's we're basing it on factual kind of evidence from other protocols as well.
If you guys have any questions, I'm going to start soon because I think we've kind of thoroughly gone through just about every aspect of it. There's a bit of this that's drinking from the fire hose because it is a very complex project, which again I think speaks only to the care with which it was planned. Um, you guys can probably tell just by by like the types of questions that I'm asking that I think this is a very interesting project. It's very, very different from anything else that we've seen before. But there's a hell of a lot going on with it. So definitely, like, if you're interested in this project, dig deep into the docs because they go over all that we've talked about here a little bit more. But I know that you've thrown a lot at us, and I appreciate that because we get lots of you know projects where we get somebody in and it's like they can barely answer 75% of the questions that we throw at them, and you're here
Yeah.
just really rolling with it. So I think that that's always a good sign when a protocol. We did cover how the amplifier. Yes, relentless.
Yeah, I mean,
So
I have like just a few things. Like if even if the guys in here listening want to just join the Telegram group, excuse me. Our Discord is not that active just because I'm not big on Discord. I'm sure it's going to build up as it goes. But yeah, there's a lot of thought that goes into it. And I've been thinking about this project day in and day out for the past year. So yeah, it could be a lot. But, keep in mind, first of all, in our Telegram, you can always ask us questions because we're there, pretty much all day long. We have people that are there 24 hours a day that can answer questions. Bring your hardball questions and ask us because we want you guys to be kind of smart and do your research. And everything as far as the smart contracts, they're public. We did audits for the smart contracts. We've tested them multiple times, and we didn't have any flaws or errors. Everything passed with like flying colors. Although everything sounds really complicated, it's just, everything is in the contracts. It's math and it's algorithmically programmed, so it works and it's going to continue to work. The only thing we're working on right now is just building up the community in a completely dull and boring flat market. But we're pretty confident in the future of MAXX. We know that this is going to be successful. Um, and everyone's really cool. There's a lot of people in our group that just are asking the right questions, bringing up things that we should be paying attention to, and that is really what makes us better. And we've implemented tons of things based on just the community input. So we value our community. We want to make sure that we grow a strong community and just continue to grow Max really well into the future. So
I can say too, like I've never, at least in the AMA, like the AMAs that I've done, I have never seen a protocol this committed to security. Um, they have robust audits. They allow the community to review the code. There's they have a bug bounty program. They ran it on a private test net, then a public test net. So that's another thing that's like it's very, very serious, guys. This is not, whether or not that is enough for you to invest. You got a DYOR, there's no financial advice coming here, but this is a serious project. This is not some fly by night that goes, oh, we heard crypto was making money and let's, throw up a little ohm fork with, assets based on whatever, and it'll make us some quick cash and, whatever. This is very, 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 very thought through. It's very, very thoughtful protocol. It's very, very long. I would I think that they have a very, very long term vision for the space, which, that's another thing everybody has, but like they've got the building blocks kind of all mapped out. Again, I'm always slightly bullish when I see halfway decent design because every rug I can spot just by the fact that it looks like shit.
yeah.
So, yeah, it's like it's super easy to fire. Just, oh, this looks like shit. It's a rug. Um, so, with that, I'm going to say, do we have any questions from the audience, or do you have any thoughts or things that you think that we left out?
No, I really think we covered everything. We're KYC'd. I'm doxed. My face is all over the project. Yeah, do your own research, just like Scorpio mentioned. Check us out because a lot of people sit on the sidelines, and then when the project is up That's when everyone starts paying attention to these types of projects. Based on my previous history, some of my best successes was buying into projects before they launched. That was what I would be looking into. And hopefully, we've set everything up so that the users that are part of our ecosystem, they trust us. And my job, just in DeFi alone, because I've been in this, I've seen projects come and go. We've seen tons of dead projects that are out there. My goal is to do everything I can to continue to do whatever we're doing. That's building, keeping our community engaged, giving them updates, and sticking to our word. So I think that really does cover everything. And we'd love to also hear your input. So whoever's listening, if you do trickle into our Telegram group, I would be willing to give you guys some sort of kind of encouragement to jump in. I'll hook up because there's not too many people in this room. But if you do go into our Telegram, I'll hook you up with a free NFT, the Genesis NFT, which is going to give you our beautiful artwork NFT, which is functional. You can actually use it to apply a bonus to your stake. It's a one-time use NFT, and I'll send you guys 51 Matic, which is or 50 Matic, which will give you the ability to claim that NFT for free. So yeah, take advantage of that. That's a personal hookup. We weren't planning on doing that.
Yeah, I would encourage anyone interested in this to go to the Telegram. I'm sure they're happy to go back and forth with you on whatever. I think this has been a very, very thorough AMA. You were definitely prepared to answer everything that was asked, and you were definitely prepared to explain how the protocol works, despite it being, yeah, it's a complicated protocol. Like that just shows the thought that's been put into making it sustainable, which I think is really, really cool. So thanks to everybody for joining us. Thank you for your time. And you guys can tell your friends about this and they can come check out the recording. And again, thank you so much for your time, man.
Yeah, I thoroughly enjoyed this AMA. Usually, the hosts are like all over the place. It seemed like you went through everything very nice. Went through the documents. You read about it. You gave me your opinion about what you think about the website and what we've done, and I appreciate it. Thank you guys. Thank you, DeFi Raiders, and I hope that everyone has an awesome rest of their year. 2023 is going to be big for not only DeFi but Max Finance. Thank you guys.